Welcome to Deal Dynamics. This podcast is all about selling your IT and tech business. We'll tackle topics like how to sell your business and how to manage the process. Don't forget to subscribe, hit that like button, and comment on what you'd like to see in future episodes.
We're going to talk about some of the recent transactions we've been involved in and some of the amusing stories as we've helped guide IT entrepreneurs through the process.
From my perspective with Project Idle, there are a couple of hiccups along the journey, and I don't know if it makes sense to go back to the start of when you first met them and kind of explain a bit more context around how we knew them and how the shareholders...
Yeah, the shareholders are three gentlemen based in the very southwest of England with an excellent IT tech support business.
The initial reason for their selling was because they'd kind of had a difference in opinion on how to run the business.
Yeah, difference in opinion on how to run the business. They felt the time was... They weren't enjoying so much working together as they had in the 20 years leading up to this point, and they thought the time had come to part ways through a sale of their business. It was actually one of the early ones, and they had information, so we didn't take them through a transaction readiness report, and ultimately that ended up costing us later because they weren't prepared for sale in our usual way. We attempted to take shortcuts, and that cost us, and led to the amusing part we got to at the end, which was just a complete fallout between the shareholders and recriminations all round.
Okay, was it kind of their decision not to go through the transaction report?
Yeah, it was, and the quality of the information was so good that we thought, these guys can go and we can give the evaluation pretty quickly. But
But I suppose that's yet again another testament to going through the transaction readiness report.
Exactly,
and go through that process. But the fact that they didn't go through that added some additional hiccups, but the majority of the issue was that the shareholders were growing apart, and the quality of information was amazing, but it wasn't that they weren't at the point where they were ready to sell when it came to finding a buyer to sell, and I suppose
you end up becoming agony aunt more than M&A advisor.
And that's obviously part of our role, but you want to minimise that as much as possible.
That's another reason why we do the transaction readiness report. It's an opportunity to get to know the seller, for them to get to know us and know that they can trust us. And not that it has ever happened, but you might get to the point where you think, I don't like these people. I don't believe I can work with these people. You're not tied to us. We don't charge the retainers, the never-ending fees. And we can walk away at that point if either party decides... that it's just not going to work, but this mutual trust and respect that we forged during the transaction readiness report and the early part helps in these difficult times, particularly on Project Idle, where you as I say, you're playing agony aunt more than or as much as M&A advisor. Yeah, so that was one example, Project Idle. Another example of a difficulty and management skills that we were able to help with was. During one transaction, the acquirer we had found was based in the USA. Now, all well and good, you might think, but what we didn't know, and what I don't think you could ever prepare for, was that the acquirer's accountant was a well-known Big Four accountancy firm. Now, our seller had this accountancy firm as one of their major clients, and so there was a conflict of interest. Therefore, we had to step in and broker a deal whereby the acquirer stood down the accountant for a period of time to allow the conflict of interest to go away, to allow the sale to proceed. Now, this isn't taught at any M&A school, but it's all part of the service we offer, that we understand how we're pragmatic in that we can work around any hurdles or issues that come along. That was a particularly unusual hurdle, but one that we felt comfortable to navigate.
You had a client
a seller that we were advising had a big one of their major customers was an accountancy firm.
Got you, and that accountancy firm was representing the buyer.
Correct, and there was a conflict of interests in the contract between our seller and the Big Four accountancy firm, which meant that it couldn't happen on those terms, and so it had to be find a way around it.
And that was resolved, I suppose.
It was resolved, over a period of a few weeks, and a trip out to America to meet with both the acquirer and their accountant. But these hiccups throw into stark light. We have some of our competitors, if you like, offering due diligence up front, and no amount of due diligence and no amount of money that you've paid to these companies is going to see that the buyer has an accountant. There's a conflict of interest with your major client. That just can't be. So I always query quite what you're getting in these pre-due diligence phase, and that's something we give but we don't charge for, because you can never be 100% accurate.
Yeah, and there's I think that sort of story highlights the natural ups and downs of M&A. There are going to be some
in every transaction.
Something's going to come up that you're not expecting, and I think the more prepared you can be for that, that's going to help something. But it's not going to stop everything, so you just really need someone in your corner who's been through a lot of unpredictable elements and unpredictable parts of M&A. Yeah,
is unflappable and knows the buyers and knows what they're thinking in this sector to be able to find a way around it. Yeah. And if you can find, as we do, or attempt to do in the Transaction Readiness Report, 6 problems, then you'll be well placed to sell. The 7th, you might have to work on, at the time it arises that you hadn't foreseen, because you just can't foresee it.
Yeah, all businesses have pitfalls. Yeah. It's about just minimising that and making sure that you're aware of them and you're tracking them, and you have the kind of key performance indicators, and you understand which pieces of your business need work and which bits are performing really well relative to a
that's
to
exactly
a buyer. The conclusion that I come to is that you do want someone in your corner when those unpredictable things happen in M&A, and you want someone in your corner who's done it 100 times before. And the reality is, taking that on your own, if that's an opportunity, then there's going to be a lot more things that come up that are completely unpredictable to you, and without the proper preparation, you really just won't know what's around the corner.
Thanks for listening to the Deal Dynamics podcast with your hosts Gary Smith, Stephen Taylor and Jack Chiappi. Please subscribe to our channel, like the video and comment on what topics you want us to discuss. Don't forget to sign up for our newsletter, as we provide insights, reports, deals, events, trends and more. Just head to venturecorporatefinance.com/newsletter to sign up for free. The link is also in the description. That's all for now, folks. See you next week.